How many questions we have done? 27? 28 is over. Next question number 28. Question number 28. A Limited issued 9% convertible debenture at 10% discount. Looks similar but not same. For 7 lakh rupees on 1/4/2009. So your initial proceed received will be 6,30,000. These are to be converted on 31st March 12 at 5% premium. So how many years are involved here? 9, 10, 10, 11, 11, 12. 2009, 10, 10, 11, 11, 12 at 5% premium. Wait. A Limited will pay cash bonus of 50,000 on 31st March 11. 31st March 11 means how many years from today? 2 years. So in year 2 you will make 2 payments, coupon payment and cash bonus. Debenture holders are required to pay rupees 20,000 for credit appraisal of debenture on 31st March 2010. Inflow. This is inflow. Debenture holder is paying to the company. So this we will show as inflow on 31st March 10. How many years from the date of issue of debenture? 1 year. So at the end of year 1, you will write inflow 20,000. So this time the difference in this and the other question is 2 more cash flows they have mentioned. Cash bonus in the second year. Company will pay credit appraisal fees of rupees 20,000. The holder will pay to the company. Similar debenture without conversion option, 18% is the coupon rate. Compute debt and equity. Again a test of your skill only. Make a list of cash flow, discount it at 18% and find the value of liability first. This time only 30 seconds will be allowed to you. 30 seconds starts now. Be little active. We get such questions in the exam also. I'm not trying to torture you. Over. And write homework. Prepare ledger account. Homework. Prepare ledger accounts. Homework. Like previous problem. Okay. You'll prepare 2 accounts, liability account and equity account as homework. Before sleeping today, do the homework. Anybody who got the value of liability? Check the answer. Year 2009-10 or you can write year 1. Interest payment 63,000 written. 63,000. Year 1 credit appraisal fees received. Use a different sign here. If you are using outflow sign here, use positive here. Or you can use minus sign because minus sign is only 1. Year 2 interest payment 63,000, cash bonus payment 50,000. This is year 2. And year 3 interest payment 63,000. Is this debenture mandatorily redemption, mandatorily convertible debenture? Yes. How do you know? These have to be converted. These have to be converted. Okay. At 5% premium on 31st March 12. In the first line and second line, they are to be converted at 31st March 12 at 5% premium. So check the answer 155922. So how many of you got it right? Honestly. Oh, wonderful. Results are improving. 155922. And then write down equity is equal to proceeds minus financial liability. I think this question has been asked or may be asked. 90% of 7 lakh in minus 155922. 474,078 approximately. You'll be able to prepare the ledger accounts. But in this ledger account, you have to pass two more entries in this problem. In the first year, you have to pass one entry for 20,000 received. Bank account debit to financial liability account. And in the year 2, you have to pass two entries on the debit side for payment. Financial liability to bank 63,000. Financial liability to bank 50,000. Is it right? And your account should close at the end of 3 year. Last year maybe you can make some adjustment in the interest amount, and it should not be a very big difference between 18% of the opening balance and the balancing figure. If the difference is major, means something you have gone wrong somewhere. Equity account opening balance carried down. Opening balance carried down 3rd year. Buy balance brought down this number. To equity share capital 7 lakh plus 5%. 7,35,000. Difference by reserve and surplus. You'll be able to do. Okay. So only I will give you initial entry. Write down initial journal entry. In the exam, if they ask only initial journal entry, then up to this. If they ask you to prepare ledger accounts, then you have to complete the ledger accounts also. All types of questions are asked depending upon demand and supply. So bank account debit 6,30,000. Don't debit discount account. That is not in this chapter. To financial liability, first working note figure. To equity, second working note figure. Is it telling? Ledger account is homework. You'll be able to do. Okay, one more practice. ASF Limited issued 10% convertible debenture on 1/4/2008. This time 100% result I want. Okay. One more chance to prove yourself. On 31st March 11, company will repay 40% debenture at 10% premium. On 31st March 13, company will convert remaining debenture into equity share. So it is a partly convertible debenture. 40% will be redeemed, 60% will be converted. Debenture holder will have the option to receive cash instead of share. Sorry, you have to read this line also. Means they can opt for cash also here. Is it right? If they want, they can opt for cash also. So consider the redemption value here, because debenture holder has the option. Similar debenture without conversion right carry interest of 12%. Compute date and equity. Start. Partly convertible debenture. This 40% will be paid in cash on 31st March. This 60% investor has an option to receive cash or equity share. First you try. I can do it, but you must try. Write neatly. I am going to check now who is writing and who is not. You have to do it. After about 20 questions, you should be able to solve now. Okay, over. What is the total maturity period of this debenture? 5 years. First year, second year, third year, there is no problem. Same coupon will be paid. And then in the third year, you will write one more cash flow. Redemption of 40% at 10% premium. Then in your fourth year and fifth year, coupon amount will change. Have you reduced the coupon amount? Because you have redeemed 4 lakh rupees principal. And then you will also consider the redemption value of 6 lakh, because the redemption option is with the holder, the bond holder. So check the answer. Total must be matching with what I have written. First 3 year interest payment on 10 lakh at 10%. Year 3 redemption 4 lakh 40,000. 4 and 5 interest payment 60,000. Year 5 redemption 6 lakh. These are the cash flow. You can write separately, you can write 1-3, 4-5, whatever. Now you tell me what is the total of this financial liability. Yes, come on. 9 lakh 65,860 approximately. So how many of you got right this time? Oh, wonderful. 99% result. Almost 100. So what is the equity now? 34,140 approximately. Total must be 10 lakh rupees, both the numbers. 10, 15, 20, 100 rupees difference is okay. No problem. Got it? Try the next one, those who have done. Others will complete and then try. Each question is changing slightly. Okay. Okay, now come to next question. 30 number. A Limited issued on 1/4/2010 12% debenture of rupees 100 each for rupees 10 lakh at 6% discount. Discount underline 6%. So your proceed will be 10 lakh minus 6%. These are to be converted into equity shares. Date of conversion is 31st March 13. So calculate number of years. 3 years, 10, 11, 11, 12, 12, 13. Interest is charged on yearly basis. Assume debenture without conversion rate is 15%. Compute debt and equity. Oh, this is very easy. This is like a practice only. 20 seconds I will allow now. 20 seconds. Over. Learn to think and write fast. Check the answer. First 1,20,000, 1,20,000 3 times you have written. Is it mandatory conversion or optionally convertible debenture? Mandatory. These are to be converted into equity shares. Then check the total. Is it approximately 274,080 plus minus some 100 rupees? Or you've taken redemption value also? No. These are to be converted into equity share. Equity portion will be proceed is 9,40,000 minus liability part. Approximately right. 665,920. Is it right? Try the next one. Or you write down journal entry, initial journal entry. Since you have space, write that. Use the space. Initial journal entry. Initial journal entry. Bank account debit 9,40,000 to 12% debenture account, your first answer, and to equity account, your second answer. As per your notebook, it should match. Ledger account is homework. Right? Prepare ledger accounts, homework. Prepare ledger accounts as homework. Okay, few more questions we will try. And now your patience level is coming down. A Limited issued on 1/4/2008. But now in the exam, at least your 8 marks are secured. 13% debenture of 15 lakh at a discount of 10%. These are convertible into equity share. Interest is paid yearly. At the end of year 3, the company has agreed to pay premium in cash at 1%. So one more cash outflow will take place in the third year. Conversion date is 31st March 13. So how many years are involved? 5 years are involved. Is it 5 years? Similar debenture without conversion right can be issued at 18%. Calculate debt and equity. And this time the question has asked you to prepare debenture financial liability and debenture equity account. It's a 5-year problem. Okay. Classwork only. First you tell me the value of liability part. There is one extra adjustment. Be careful. In the third year, you have to also consider premium in cash 1%. Pass the initial entry also. Come on. Okay, first we'll check the answer. Time over. Year 1, 2, 3. Have you taken 1,95,000 interest? And year 3 you also take 15,000 rupees, 1% extra that they have to pay. Done. Fourth year, fifth year again 1,95,000. Discount at 18%. Present value approximately comes to 6,18,900. Or you can just write in two line 1-5, 1,95,000, and only year 3, 15,000. Done. That is also okay. So it is approximately this number 6,18,900 something. Okay. So what will be the equity component? Balancing figure, your proceed will be 13,50,000 and the equity part is 731,100. Okay. Now we are going to prepare the debenture financial liability account. Start. According to your notebook, you have to move forward. Okay. So first you write down debenture financial liability 5 years, means you will require around 25 lines. Okay. If you have the skill, draw the format of ledger account quickly, no choice. Start. Follow my instruction. What is the date of issue of this instrument? 1/4/2008. Otherwise write in notebook if you don't have enough space there. 1/4/2008 by bank. The amount you have allocated to debenture. How much you have allocated to liability? 6,18,900 or the similar amount. As per your notebook, it should match. And then you will pass entry for interest expense. Interest account debit to liability account. 18% of opening balance. If you have written a different number here as opening balance, calculate accordingly. 1,11,405. After this, we will not practice any more problem for ledger account in this chapter. One last chance. 31st March 9, to bank, payment made 1,95,000. 31st March 9, to balance carried down. Increase the speed. 5,35,000 something. Okay, now complete second year yourself. Second year. By balance brought down. By interest expense. This is effective interest rate method. We are going to solve similar problem again in the IFRS 9 also. To bank 1,95,000. To balance carried down. Check approximately 436,656.
मार्केट वैल्यू का रेट हमने लेके वो प्रेजेंट वाला है वो ठीक है, पर अभी जब इंटरेस्ट की एंट्री कर रहे तो
This is interest expense. This is the cash payment. So we are using effective interest rate method. So this is substance over form. This is my liability and my effective rate of interest is 18%. Coupon rate is only for the investor. But for the accounting purpose, I am effectively incurring 18% rate of return. That is the substance over form. We have divided the instrument into two parts. Liability part, equity part. The liability part has an effective interest rate of 18%. Okay. This is just a payment made to the investor, 1,95,000. Second year balance is over. Third year, what is the balance you got? Third year, some students have made error. They have written 1,95,000 here. Who has written? At least one. It is 2,10,000 because 15,000 extra cash has also been paid. So when you will do your homework question number 28, there also we have a problem of cash bonus. So you'll add there and 2 balance carried down. Fourth year balance, anybody? Fourth year balance? Fourth year. Around 165, 200. Fourth year, not third year. We will discuss more about this method of accounting in IFRS 9. As I said, accounting is not a part of this chapter, but sometimes they ask questions like this. So that time I will explain in detail effective interest rate, why we are doing it and why it is right. In school level accounting, when we were in 12th standard, we used to only account what actually the interest was paid. This is just a payment. For accounting, this is the interest I am incurring. As my balance is reducing, my interest is also reducing. So every year my interest is 18% of the opening balance. Last year you should close the account by using interest as a balancing figure here. Is it right? These cash flows that we are writing, you will get from your first table. Okay? You have to learn this accounting. Tomorrow, after some months, you will join some office and you have to do it actually. If you don't do it, they will ask you to sit in the store only. So you have to decide where you want to sit. Equity account. Have you prepared equity account also? No, I am not giving you a choice. Equity account, first year I will draw. Second, third, fourth is just a opening closing balance carried down, brought down. First year I have drawn. Second year, third year, fourth year, you will just write buy balance brought down, same figure, 2 balance carried down, same figure. Repeat up to year 4. Repeat up to year 4. Buy balance brought down 731 100, or as per your notebook what you have written. After fourth year, fifth year, buy balance brought down 731 100. And what is the equity share you have to issue? You have to issue equity shares. Issue the equity share of 15 lakh. This time it is not mentioned that it is 10% or 5% premium. So we will issue equivalent number of equity share, equivalent value of equity share 15 lakh rupees. And then buy equity balancing figure, reserve and surplus. Buy reserve and surplus balancing figure. This way equity account will close. Okay, one more chance to prove your intelligence. Question number 32. For those who have done, others will first finish it. 32 number, try your luck again. 32. I will not read also. Otherwise, you will get the hint. Question 32. Question number 32. On 1/4/2010, X Limited issued 9% debenture, rupees 8 lakh, at 10% discount. Redemption plan 31st March 12, 50% redemption at 10% premium. 13, 30% redemption at 20% premium. 14, 20% conversion at 10% premium. So 80% you have to redeem in cash, 20% is mandatory conversion. Okay. Compute the financial liability and equity market rate is 13%. So first you have to correctly make a list of cash flow. What cash outflow will take place in year 1, 2, 3, 4. Okay. And then discount it at 13%. You should be able to do. Done. Check the answer. Okay, see the answer now. In case if you have done. Year 1, there is no activity other than interest payment. That is year 10, 11, we just pay 8 lakh into 9%, 72,000. In second year, we have to also pay 50% of 8 lakh plus 10% premium on that. So what is the cash flow in year 2 you have written? 72,000 will be interest. Like this calculation, up to year 2 interest will be 72,000. 8 lakh into 50% into 110%. So have you written 5 lakh 12,000 or separately 72,000 and 4 lakh 40,000? Welcome. Year 3 again same thing, but my interest figure will change now. Half of the debenture I have redeemed. So my interest will also become half of 72,000 now. And plus we are redeeming 8 lakh into 30% into 120%, 20% premium. Have you received 3 lakh? Have you got 3 lakh 24,000 answer? Or you have written separately 36,000 and this is 2 lakh 88,000. That is also okay, no problem. Presentation can be different in terms of this answer, but finally this must be right. And last year only interest, because 20% is mandatory redemption, mandatory conversion. So interest will be now paid on 8 lakh, 20% is remaining only, 80% is already redeemed into 9%. Are you getting 14,400 interest in the last year? And if you apply 13%, your liability is approximately 6,97,675. Is it there? 698 is also welcome. Okay, welcome. But you are close to 697. So how many of you got it right? Oh, wonderful. More than 50% students have got it right. What about the equity component? Proceed is 7,20,000. Have you written? Proceed 7,20,000. Less liability, and therefore equity approximately 22,000. Plus minus 100 rupees. How much you got? 21,969. Okay, that is also okay. Purpose of this practice is that they can give you any type of question. You have to visualize the cash flow properly, which is mandatory, which company cannot avoid. That's it. Now we'll solve one question number 40 at the end. Answer is also printed. Wow. So you want to solve or just understand? Understand. In one voice you have answered, huh? What a unity. Okay, tomorrow your batch is off. And then on Monday we will again start at the same time. But come to question number 40. Okay, we will understand in the book only because the answer is fortunately right. On 1st April 20x1, an 8% convertible loan. Problem is same, but a small difference is there. In different ways, the same question is asked. 8% convertible loan. Now, whether they write loan, debenture, bond, note. Note is also debt instrument. The answer is same. With a nominal value of 6 lakh issued at par. It is redeemable on 31st March 20x5. How many years? 4 years. Also at par. Redemption is also at par if at all it is to be redeemed. Alternatively, it may be converted. Now see the difference in the wording, may be converted. Previous problem was are to be converted. On the basis of 100 new share for 200 worth of loan. An equivalent loan without conversion option would carry interest at 10%. Now this question says, which a student had asked a query also, interest of rupees 48,000 has already been paid and included as a finance cost. But we will apply effective interest rate method. This is coupon he has paid, 8% of 6 lakh. But if you apply effective rate, your answer can be different. Then in that case, you have to pass one rectification entry for the difference amount. Okay. Present value rate factors are given 8, 10, which is relevant? 10% because market rate of interest is 10. So this we will take. How will the company present the above loan notes in the financial statement for year ended 31st March 2000 x2? 31st March 2000 x2 means first year only. The instrument was issued on 1st April. They have asked to entry only up to first year. One entry they have already passed. Interest entry they have already passed. If that interest amount is different from effective interest amount, you will have to pass entry for the difference. Okay. So first, as usual, in the answer they have given the detailed explanation. You are not required to write so much in the exam because you have other answers also to write. Okay. You will write step 1, calculation of financial liability and equity. Year 1-4. How much is 1-4? Tell me the amount. 6 lakh into 8%. This is cash flow. And year 4, is it 6 lakh? 6 lakh. Factor in the question they have given, add them. 6, 10% and 4 year, add them. How much is that? 3.17, 0.68. Help me. 48,000 into 3.17. 152. And this one? 4 lakh. So what is the total of this cash flow? 5 lakh. 60,000, 160. So what will be equity now? 6 lakh. 5 lakh 60,000, 160 approximately. 39, 840. 39, 840. And then what is the entry you'll pass at the beginning? Journal entry at the beginning, they have not written, write down. What entry will you pass? Because first year they've asked you to pass the entry. Bank account debit. How much? 6 lakh. Write somewhere nearby. To financial liability. 560160. This is what you will write in the exam. To equity. 39840. Okay. How much interest they have already provided in the profit and loss? 48. But how much they should have provided? 10% of opening balance of debt. Opening balance of debt, if I go as per our calculation, 5,60,000, how much? 160 into 10%. So that is 56016. 48,000 he has charged. 8,000 more he has to charge. 8,016 he has to charge. For this, one more entry you have to pass. That is finance cost account debit 8,000 to debt component 8,000. Right. So what will be the closing balance of the liability? Sometimes they ask you what is the closing balance of liability. Anybody? Closing balance of liability. Write this also at the end. Closing balance of liability as on 31st March 20x2. Opening balance you have said 5,60,000, 160. And plus this 8,000. No, plus you make. Okay, we can do like that also. Effect is same. Plus you write interest 56016 and minus 48,000. Or you can directly write the difference also. That is what we did anyway. So this comes to how much? 5 lakh 20,000. 568. It will increase. Right. So write down this also. The question was, how will the company present the above loan notes in the financial statement for year ended 31st March 2002? So the liability amount will be this much and equity amount will remain the same. How much was equity? Do you remember? 39,840. In the SOFP, liability will appear at this amount and equity will appear at this amount. So up to this you have to write to conclude the answer. Because the question is, how will the above items appear in financial statement for the year ended 31st March 20x2. So this also you note down somewhere. Financial liability will appear at 560 at 176. Equity will appear at 39 840. Done. Can I go to the next question? This you have done? Answer according to question. But normally students answer what they are interested in. Let them ask whatever they will ask. I will write what I want to write. One more chance. Only from the book, okay? Just check whether the answer is correct or not. Correct? I don't know, I have not checked. K Limited issued 5 lakh 6% convertible debenture at rupees 10 each. Means 50 lakh rupees is the total value. On 1420x1, debentures are due for redemption on 31st March 20x5 at a premium of 10%. Convertible into equity share to the extent of 50% and balance to be settled in cash to the debenture holder. So in this problem, on maturity date 50% is convertible and 50% is payable in cash. The interest rate on equivalent debenture without conversion rate is 10%. You are required to separate the debt and equity component at the time of issue and show the accounting entry in the company's book at initial recognition. And they have given you two discount rates, 6% and 10%. So we will take 6%, 10%. Good. Half of you are still awake. So 10% is right. Solve. No, that is wrong. That is wrong. What is written in book is wrong. Afterwards, don't blame me. It is a 4-year instrument or 5-year? 4 year. So every year the cash flow in the form of coupon payment. Coupon payment will be 5 lakh into 6% into 10 rupees. Is it 3 lakh? Is the coupon 3 lakh? And year 4 you have to redeem only half of the instrument in cash. So 50 lakhs into 50% only will be redeemed in cash, and that too at a premium of 10%. So in 210%. Discounting factor at 10%, 3.17.68. Calculate this. Is it 18,70,000? Yes. No, I think this should be written here. Interest is different. 9,51,000. 9,51,000. It seems the answer is right. Financial liability is 21 lakh, 28 lakh, 21,000. 28 lakh 21,000. So equity will be 50 lakh minus 28 lakh 21,000, 21 lakh 79,000. And journal entry from the book, bank account debit 50 lakh, to debenture account liability 28 lakh 21,000, to debenture equity account 21 lakh 79,000. Okay. 41. This problem has one transaction cost also. So in this problem we will see adjustment for transaction cost. 8-mark question. Very, very important. Entity A issues a 10% note with face value, note, loan, debenture, bond, same thing. Face value $1,000 for a period of 3 years. On maturity, the holder has an option. Who has got the option? The holder, to receive a cash payment of $1,000 or rupees 10,000 of the issuer's shares. So I will consider that 1,000 also in the last year because the option is with the holder. Market rate for a note without a conversion feature would have been 12% at the date of issue. So this is discount rate. Entity has incurred. What is the new thing they have added now? Transaction cost of $100 in issuing the convertible note. Right now, while calculating the liability and equity, don't consider this. After calculating a portion in that ratio, there is a contractual obligation to pay cash for the annual interest payment and the principal amount at the end of 3 years that the issuer cannot avoid if the holder does not exercise the conversion option. So what is the question? Question will be, what is the value of equity and debt? Okay. So first we will find out the value of liability. Year 1, 100 rupees, $100. Why 100? 10% into 1000. Year 2, same 100. Year 3, 100 plus redemption 1000. Then discount rate you use at 12% and tell me the present value. Come on, you're not answering. Is it 952? Check, then answer. In the exam, suppose we don't have time, we can reduce this column. Directly take on calculator 100 divided by 1.12. So that will be rounded off 89. 100 divided by 1.12 equal to 2 times. So that will be 80 rounded off. 1100 divided by 1.12 3 times equal to. So that is approximately 783 rounded off. Total 952. Okay, we have less time in the exam. This is also allowed. Why to write one extra column? Directly this number divided by 1.12, the way it is presented in the notes is also okay. Total proceed minus financial liability. Total proceed is how much? 1000. Financial liability 952. So equity will be 48. Now you understand why I have taken this problem. There is a transaction cost of 100 will be apportioned in the ratio of 952 is to 48. Just try 100 apportioning in the ratio of 952 and 48. How much? So this is 95 and this will be 5. Just check. Is it right? Have you checked or just yes, yes? After this, the value of your liability in the books will become 95 less 857. 857. Opening balance of liability will become 857 and equity will become 43. Is it right? But dear student, now the story will change. You will have to recalculate EIR because your opening balance has changed. So if your opening balance was 952, then only after 3 years your account will close. But you have changed your opening balance. Now after 3 years your account will not close. So therefore, you have to recalculate the effective interest rate and then do the accounting like what we did earlier. And then do further accounting and then do the further accounting. So it will create now some more complication, which I am right now not entering into. We'll enter into this complication in the next chapter. Okay, because I have to now teach you how to calculate IRR. That itself is a 3-hour job. Sorry, 3 minutes job. Assuming you know IRR calculation. If you don't know, then it is a long discussion. After calculating IRR, then my question will proceed further now. So if they ask you to pass journal entry till the end of year 3, you are into a trouble, because you have to now calculate IRR, and that IRR will be used for effective interest calculation. Is it right? We'll do that, but in the next chapter. Okay, one more question for today. Kappa Limited. Katappa ni, Kappa. This was asked in England CA exam, okay? These last 2 questions which we have taken. In UK also you can do CA, okay? That is much easier than our exam. Kappa is a listed company whose year ending date is 30th September. On 1st October 2006, Kappa issued $6 million convertible loan note. Quoted rate of interest on loan note was 2% per annum. This is coupon rate. So you are going to pay cash flow 2% of 6 million. Payable on 30th September means after 1 year. Annual payment. In arrear means at the end of the year. The loan was repayable at an amount of $7 million. Now this is redemption value. Issue is 6 million, but redemption is 7 million. On 30th September 2009, how many years are involved? 3 years. 6, 7, 7, 8, 8, 9. As an alternative to repayment, the lender may choose to receive 1 million share in Kappa having a nominal value of $1 each. The required rate of return for the provider of this type of loan is 10%. Now the question is like this, which is not printed, type. Calculate closing carrying amount of liability at the end of first year. 4-mark question. Calculate closing carrying amount, not opening. Most of the students will write opening. What we calculate is opening. You have to reach till the end by passing 2 entries. One for interest, one for payment. Then closing balance. Is it right? So in the ledger account that you have prepared, 1 year ledger you have to prepare. Okay? 1 year ledger, first year ledger only. That is why I made you practice 2 questions to prepare ledger account. They can ask you what will be the balance in year 1 or year 2 or year 3. Prepare ledger account, you'll automatically get the balance for that particular year. So first we will solve like a normal question we have been doing. Year cash flow, present value factor. First year we will pay coupon 2% of 6 million, 1,20,000. Just check. Again repeat, 1,20,000. Last year we are going to pay 7 million. If it does not opt for a conversion, if it does not opt for conversion, we have to pay 7 million plus the third year coupon. So total outflow will be 71,20,000. 10% factor use, calculate the financial liability. Anybody who can give me the answer? Factor, I hope you can directly take 1,20,000 divide by 1.10. How much? Total, give me total. 55,57,626. This is right, seems to be right. At least in the book they have written 5557. First 4 digits you have matched. and the total proceed is how much? 6 million. 6 million minus 5557626 is how much? 442 374. In the exam you can write in dollar in thousand also if you want. Then your answer will be 5557. You can do that. That much is allowed. Answer is not over. Student will think my answer is over. You have only answered the beginning value. End value you have to find out. So how will you reach the end value? You can prepare a simple ledger account, I will suggest. Opening balance, to that you add the interest, 10% of opening balance. Interest expense will be opening balance into effective interest rate. This is effectively you are paying as interest. And then reduce the payment made, 120. Reduce the payment made, 120, figures are in 1000. So therefore the closing balance of liability at the end of year 1 will be 5993. Okay. Now we have completed convertible debenture. Next is convertible debenture with call option. So one more option we will embed in that instrument, that is callable convertible bond, which we will take on Monday. So next lecture we'll complete it in next half an hour and then we'll take IFRS 9. So come prepared. Okay.